Hello everybody, how's it going today? It's August the 28th, about 12:30 p.m. Central Standard Time here in Manitoba, Canada. I'm back from Vancouver and it's time for back to real life as well. So I do miss it quite a bit already. I have some very good friends out there and I'm very excited to either move out there one day or just start visiting there a lot more. I'm just in love with the mountains and the water. But guys, let's get into this technical analysis. It's very much so close to the end. So when it gets closer to the end, I think it's a very good time for us to evaluate what is possibly going on and what looks like could happen down the road. I think that, in my opinion, right now, that we are most likely going to get a breakout to the upside in the middle of December. That's my personal opinion, okay? I think that we're going to actually get a breakout before the end of August as well, okay? So actually, let me rephrase this. At the end of August, I think we're going to get a small breakout. And then near the middle of September, I meant to say, we're most likely going to get a breakout to the upside. So just taking a look at the monthly right now, we're getting some I would say, shooting star type candles. This could be perceived as kind of like, for example, a bearishly spinning top, you can say, except the body is very small. Or it can be misconstrued as a shooting star as well. But this one's is certainly a shooting star right over here. Our size in neutral territory right now, around 65. Of course, we want it to pop much harder than that if we would like to have a bullish run. We take a look at the weekly as well, okay? The weekly does not look the best right now, I do have to admit, okay? On the weekly chart right here, we're finding a bounce, okay? This is where the contradictory part is. We're getting a bounce right off of this is the 13 moving average, which is phenomenal on the weekly, right? And then we're getting a bounce off of there, bounce off of there, bounce off of here, bounce off of there, and here as well, and also here. Hold on, let me have a sip of water. All right, so now the question is, are we actually not going to break below this 13 moving average? So I'm still in a long position from $9,800, guys, and that's been from a while back already. So the way I'm looking at this on the weekly is that the MACD has now officially crossed over to the negative side, and that just happened about 3-4 days ago, okay? So what we're wanting is a very short histogram tick down, if even, okay, if even, and hopefully we'll get a recovery to the upside. My favorite type of patterns to see are this, or one of my favorite patterns. You see a red line? That's the longer moving average, okay? The longer moving average actually just continues to go like that. Okay, and then what we see after is we can see something like this. And then the blue moving average just crosses over slightly to the negative side, and it just comes right back up. And then this is where the major crossover happens over here, okay? That's where the major crossover happens to the downside. And then on the green bar over here, what we get is just a very small histogram tick crossover for the short moving average to the negative side. So that to me makes a lot of sense, and that's why we could most likely get a very bullish run this year. This year near the end of the year, I wouldn't put it past anything, guys, because crypto, if it's something that it's taught us to believe, is that it has defied all impossibilities. And right now, we take a look on the 3-day chart as well, and we see it's just ticking downwards to the negative side. So we take a look at the daily is here. We're seeing a slight recovery on the histogram. Take a look on the 2-day, right? On the 2-day, actually, let's go back one more time. On the 2-day, we see it possibly just using this 55 moving average here as a launch pad, as a slingshot to go above it, right? So let's see if that's going to actually just hold true, and let's see if something like this even ends up happening, where the yellow moving average just ends up extending it, okay? Ends up extending, and then we just get a launch pad going up to the upside there, where it just ends up going bam, right? And then it goes to the upside. And on the daily chart, that's the one we're going to be looking at, okay? Right now, the way that this daily chart looks like is, to me, as well as a descending triangle. But we can't discredit this as well, right? Just this amazing slope right here that we're seeing. But I need to talk to you guys about the bearish side as well, okay? So this is the bullish side right here, where we're hovering slightly below. In this section, first of all, let me backtrack, okay? In this specific section, where we're getting the 200 moving average, which is right here, okay? That's the 200 moving average right there. if you guys are not familiar with it. And then the yellow one right there, that's the 55 moving average. Whenever we get a sandwich in between those two EMAs, something generally tends to happen. Think of it like a resistance where we cannot break above the 55 EMA, but we're also moving closer towards the 200 moving A. So if we, for some reason, on the bearish side, broke down over here, okay, we're most likely going to get caught somewhere, in my opinion, somewhere if that breaks, somewhere between here and the 200 moving average, right? So we're getting some fairly heavy support here. First of all, say above 1800. That's a really strong support to me. Okay, but let's talk about the bullish side first of all. We're seeing this in particular right here. Now, what worries me the most is that we cannot break above this 55 moving average. In fact, we've been rejecting it since August the 14th now, which has been for 14 days. That's a pretty long time, in my opinion. Okay. So now if we do not break above there, we're just going to obviously get sandwiched in between this particular section right here. Okay. Watch. So that's basically in between the 55 moving average and also the this support trend line that has been forming for a while. Okay. Now we take a look, on the 12-hour chart as well, and we're seeing the exact same thing. We're getting a sandwich in between the 55 moving average and the 200 moving average, and between, in general, just this entire section is squeezing into an apex that's looking to break to another side. So now we take a look at the 12-hour chart as well, guys, and I'm seeing, I'm seeing higher lows in here, right? Higher lows. And it does seem like it's just definitely possible for a breakout soon, because we take a look at the histogram that's just slowly going upwards, right? Or consistently maintaining positive attributes. So if this does break up to the upside, excuse me, we're looking at a long position, right? For a pretty decent gain here. I mean, where would it be? Most likely, in my opinion, to the 618 fib region, right up here somewhere. Maybe like a strong breakout up to, anywhere between here, in my opinion. That could act as resistance, because we could hit it like right around here, I would say. This particular region between 11,000 and about 11,300-ish. So then you get a pretty good risk to reward of about 4 to 1. That's not bad. If you can target conservatively around 11,200. I mean, that's a pretty big gain, guys, for a possible 8% gain there, right? So that's my opinion. Okay, what could happen very, very soon. And we're talking about by the end of August. Okay, like in the next 3-4 days, this breakout could happen to the upside. Now I want to talk about going to the downside, of course, right? If we break to the downside, no doubt we're going to find some resistance, first of all, right around here. Like, we're not going to break any of this yet until there's a lot of conviction. The 200 moving average is a very significant number right now. Okay, it's a very significant number on the. It's actually freezing here. Give me a second. I gotta close some windows. All right, I'm back. You guys know that in my city today it's extremely cold already. I mean, today's only 17 degrees, and it's starting to get to the point where I've got to actually turn on the heat already. So, anyways, where were we? Sorry about that. So that's a very possible place for it to get up to once again, right? I'm gonna guess around, we'll just say 11,000, conservatively 11,000 to 11,300 at most, okay? But realistically, we could even top it up right here at this particular high, and that actually coincides as well with the 0618 fib region, where bears enter the market. Now, once again, if we don't break to the upside there, we're obviously gonna find some sort of support where the 12-hour moving average is. If you take a look at the 12-hour moving average, since this massive bull run, as soon as it started to break out around this April region here, okay, broken around the April region, and you see it never even getting close to the 12 hours one, right? Every time it gets closer, it just bounces off of it. So let's see if it's going to react the same way. Now, we'll take a look at the 6-hour as well very quickly. We see that the 6-hour right here has already death crossed. The death cross is when the 55 moving average and the 200 moving average ends up crossing each other, where the 200 moving average ends up being above the 55 moving average, and it acts as a resistance. okay? So right now we've already death crossed, right? Now we're getting basically this sandwich is squeezing into this little apex region down over here, and something is absolutely going to happen, in my opinion, in this particular region. It could be by the end of August, okay? So once again, if we break to the downside, we'll no doubt be caught somewhere in one of these. Like right now, we break the 10K region, okay? 10K is a pretty big psychological number. So most likely we're going to go every 500 down. So anywhere between, I'd say 9,500 and up will be the next the next support if we break down. Now, let's say we broke up, and let's just do a further analysis for down the road for all those swing traders or longer term holders, okay? Let's just say we go to the daily chart now. Let's actually just even add this to a log scale, okay? Right, so let's just say we end up breaking to the downside or to the upside, and this ends up catapulting to the upside, okay? So we're going to assume that this is just one of the waves going up, okay? We're just going to assume, we'll just play it like this, okay? Let's see. Let's go to weekly, actually. Let's see better. You guys are familiar with how log charts are, right? Like log charts they spread out data better to make sure that over a long period of time it conforms to a chart better. That's the best way I can explain it. So maybe I should go to a daily, actually, or 3-day. Okay, so let's say we go to 3-day, and this whole thing is 1, right? I know it looks weird, okay? It looks extremely weird when it's like that, right? But we're just hypothetically playing around, right? Where that's 1, and that's 2, and that's subwave 1 now, and then we broke up to the upside, okay? That's the hypothesis right now that we're formulating. So if that were true right there, and this actually broke up to the upside, and this whole thing was actually a retracement of what? This was actually one of the most bullish retracements we have seen for the subwave 1, okay? Which is actually at the 382 already. Now, it doesn't look like it's at 382 because it's in a log scale, but here's it in a non-log scale, okay? But in a log scale, it looks like that. So now let's just say, hypothetically, we're just going to take a simple trend-based fib extension from this point here, where it began around the 3,300 range, where it ended around the 13,800 or so range, and where it ended up retracing to the bottom. So it ended up retracing to roughly $9,000, okay, 9,100, and now we do a very simple target, okay. Now we do a very, very simple target of a 1-to-1. Now let me explain to you guys how it works, okay. What we assume automatically based on Elliott wave theory is that we say that wave 3 is often the longest and never ever the shortest, right? It's often longest and never the shortest. So it means that wave 3 is usually longer than wave 1. Especially in a rally, it often is. It usually is not at all. It'd be rare. But sometimes you can see wave 3 smaller than, wave 1. As long as you see wave 3, wave 5, like, let's just say it went something like that. Like, in a leading first wave diagonal, right? Leading first wave diagonals, for example, wave 3 is often the middle one, and then, wave 3 is often the middle one, and then wave 5 is the shortest, right? That's just examples sometimes. But if you are getting a traditional impulse wave going to the upside, wave 3 is often longest by at least a 1-to-1, okay? So if it's longer by that than by at least a 1-to-1, then we always say that, all right, well, let's just make this one actually. Let's not have that much of a retracement, okay, Phil? All right, okay, so it'll be at least longer than it by a 1-to-1 extension by Fibonacci, right? So fib extension of 0 to 1 to 2, wave 3 should be longer than at least a 1-to-1. That's a theory. But generally speaking, it most likely will target a 1.1618, okay? 1618. That's the one that we would most likely want to target. So by Fibonacci, we would say that that's now 1, okay? That's 2 down over here to the breakout, to this entire section, okay? And then bam, we break to the upside right here. Boom. We break to the upside like that. And then what we say is, okay, we got these possible targets right here. 1-to-1, and also something that, ignore timeline. I'm not doing timeline analysis, to be clear, okay? So now look what we got, guys. Let's change this to a nice bright color that's much more visible. Always keep your charts a beautiful color that you can actually see. So bam, we break to the upside. And now all of a sudden, okay, we'll delete this. We don't need to see that anymore. All of a sudden, we're going boom to one of these, okay? You see what I mean here? So this could be a very possible target. If we break to the upside, okay, I'm just going to take this out as well. We're just going to draw this in a way that color coding is much nicer, okay? So let's just say this breaks to the upside like that. Okay, so now we got a choice, right? We can, let's just say hypothetically it went to there, and let's just say, you know, I'm going to make another line to over here, but I'm going to make a dotted one to give you guys visual representation of the possibilities, right? Here's a dotted line. So that's one possible path, right? Target one, right around here, and then target two is right there. See? So this is the one-to-one extension, and I'm going to write it down here. So the one-to-one extension target is around 19,700. I'm just rounding it up because they're such big numbers. Okay. It's possible. I'm doing a longer-term analysis is based on very simple projections, right? And this one here is about 26,200. 6,000, I'll say 150 range, okay? Right around there. Because that's a one-to-one extension, and that's a 1618. Now take a look at this, okay? This is pretty cool, right? Let's break this down even further for you guys, all right? Let's just say that we get some massive extension. Sometimes we get a wave like this. We get a wave something like 1, and then we get 2, and then we get 3. And everybody thinks that this is the third wave, but we get something slightly more than a one-to-one, okay? They think something like that. But and then it ends up retracing downwards, right? But then it actually ends up being just the first subwave of the third wave, like that. And then we get some huge retracement, right? And then we get another huge wave up. But what I'm getting to is this actually ends up becoming just basically 1, 2, and this becomes 3, and this becomes 4, and that becomes 5. So now this, excuse me, I bit my tongue there. Ouch. So this right here, people thought it was actually this third subwave, but it was actually only the first subwave of the 5 subwaves for the third wave up. I know that could be confusing, right? Let me say it again. Sometimes people think that this makes 1, 2, and this makes a 3 going upwards like that, right? And then they think that a 4 is coming down. But what ends up being is it actually just ends up making a subwaves 1 and a subwaves 2 of the entire 5 subwaves of the third wave, right? Okay, so I hope that makes sense what I just said. Now, if that were possibly true, then you never know, right? So I'm going to play this out for you. So if we actually end up only getting to here, right? So, you know, we get 1 there, just say the breakout's there, and then we get to right there. People might think, oh, 1-to-1, right? 1-to-1, might maybe a little higher to 10K, or sorry, 20K, like right around where the resistance was, right? So then we end up getting a resistance, bam, right here, which we could most likely, and then we come down a little bit, right? Just come down a little bit, like here, get a retracement, because we're now hitting that resistance, and bam, we skyrocket out of it, and then we do something like that, just as an example, right? And then this actually ends up becoming where people thought that this was a third subwave. It was actually just the first and the second coming down to still make the 3, 4, and 5. So that's one possibility of how that could have played out. But in my opinion, if we do have a very bullish year, right? You know, it's not going to be this year we're going to break out of it. These are long-term projection, guys, okay? So then if we do end up breaking out of it, this could possibly be the third wave, right? You just never, ever know. This could take a really long time, guys. The third wave, what we'll do is we'll break right out to it. Right out to the 1618 Fibonacci extension target, okay? And then we're now at 26,000. $193. We'll just say 26,150. And then, of course, we're going to get a correction, drop down to 20K. Okay, 20 or the 20K where the major resistance was, and then we shoot up even higher. So guys, the point of this technical analysis video today is to show you guys that I'm very bullish long term, okay, and that I do see a possibility of Bitcoin easily hitting $26,000, and I've just proven it right here by using Fibonacci extension and Fibonacci retracement tools to give you guys an idea of how it could possibly be done. So these are my long-term projections right now, guys. And you guys know exactly my bearish thoughts as well of how we have a hard support at around $8,800. If we break below 10K, we'll most likely catch it at 9,500 first. If we break up outside of this symmetric triangle, we're obviously going to find resistance at $13,800. If we break that, who knows? We could skyrocket to $20,000 this year. So guys, thank you very much for watching this video. I do miss my vacation already, and I think I'm gonna go on another one fairly soon after you know, my birthday is coming up next month. So we'll see how that goes. And for those that haven't processed their Udemy stuff yet, hashtag Udemy. Make sure that you guys are getting in touch with me. Okay, if you're still interested in the course, guys, I'm still doing it for 240 American dollars for the entire thing. But this will be the last month that I can give you guys a deal on the Udemy stuff by crypto, because it's actually not allowed by Udemy. So if you guys are interested in it for 240 USD for the entire course, get back to me. And I'm going to process it right away. If I haven't already, guys, get back to me, because the last thing I want is for you to wait. Okay? Bye now. Take care. Have yourselves a wonderful day.